What's up, everyone? How's it going? Welcome to the first episode in September. It might even be the first. No, I think we did some videos in August. Let's see. Let's open up the YouTube. I'm opening up on my phone right now. I just want to see if we made any videos in August, and we did. August 14th was the last day we made a video. And after that, we have not traded, and we have not created any videos on the V2 trading channel. And now I'm happy to announce that we're back, and I hope to get back to that daily schedule once again. I just got caught up with a lot of work regarding my school and things of that nature, but we should be back on track now. I should be able to have this specific set of time towards trading specifically. So I'm gonna be honest, the last 2 weeks I did not place a single trade. I just placed some trades to keep the account open because of the inactivity rule in my funded futures. But other than that, we didn't really do anything crazy regarding trading these last 2 weeks. We've been managing the long terms and building upon those structures like always. But regarding futures, we haven't done much. So I'm excited to get back into it. And yeah, I mean, not much else is there to be said. So let's get straight into this. And how I'm gonna conduct this episode is I'm gonna make it a combined analysis type of video in which we will do pre-week analysis as long as it not as well in addition to analysis of today's price action, and we will also be just reviewing the entire week and see what things that we can notice and see what things we can be prepared of, because within a 2 week span the mechanics of the market may change that little amount, and that little amount could be the difference between success and non-success if you look in a liquidity perspective. So institutions may be executing their orders in a slightly different manner than how they did previously, and we have to be able to notice that and see what type of market conditions that we're in right now. So yeah, I mean, let's get straight into it. So we're gonna start off with ES. We'll look at ES, NQ, and the VIX today, but we'll start off with ES and simply just mark out our levels. I don't want to rely on these levels too much regarding our overall areas, and I don't want to mark too far back as well. I feel like this is going to be the lowest I'll mark out because it's highly unlikely that we head all the way from up here all the way there in the span of 2 days, Thursday and Friday, the rest of the week. So I mean, nothing crazy is being there, but I am seeing this pretty large demand zone right here, and this demand zone could hold a pretty significant area where price may continue this overall uptrend that we're occurring. Price does look like it's gonna head higher, but what we've been seeing now is the overall divergence between these highs is getting lower and lower. And because of that, we're kind of seeing that this buying pressure is happening, but it's still stronger than sellers, but it's not as strong as it was previously. So we entered into more of a upwards consolidation range as compared to a nice upwards move like such that we've seen here. So that's just the given. Let's continue to mark out, but I am pulling up Forex Factory and Financial Juice on my other monitor. We'll go over those as well. But yeah, that's pretty much all that we really need to mark out on the daily time frame. We shouldn't go overboard and only mark out the most significant areas of interest. I'm liking the zone right here simply because we have touched it previously before as well. I'm gonna mark this down as a 4 hour. I'm gonna mark the corresponding liquidity associated with it as well. We have that area, we have this area. Mm, One thing I want to do is I want to reduce this level down to here simply because I'm not trying to mark out that big daily zone when we could simply mark out this 4 hour, potentially even a lower thing, which holds the same amount of significance as the other one. And we want to play this game in terms of significance, right? It's a game of probabilities, like always. You want to ensure that probability is on your side, and if you look at the risk to reward, it plays out in the long term as well. If that, if those two factors are aligned and result in positive yield with good risk tolerance, then that's a pretty good sign as to your strategy and how effective it can be in the long term. And even strategies, even this strategy that we conduct today may not work into the future as well as it is today, simply because of um what's it called? Alpha decay, simply because of alpha decay and small shifts in the economy. But if we do keep the macroeconomic roots and principles with this order flow strategy and continue to scale and adapt on that based on the market conditions, then it should be much more protected from alpha decay simply because of that macroeconomic root. But I mean, yeah, I'm just looking on the 4 hour. I'm not seeing much. We do have these levels here. This 4 hour right here, this 4 hour here, this 4 hour there, and this lower level, which we don't need to mark more into. Hopping on to the 3 hour, I'm looking to see if there's anything else. We do have this 3 hour here that surprisingly enough we're tapping into right now. So I do want to see how price reacts where we're sitting at right now. And I was planning to trade today morning, so I did do some analysis yesterday night, but I did not take any trades today. I was not even on the charts today at all, other than right now. So keep that what you will. I'm just looking to see how we can set up this pre-week analysis and conduct this upcoming analysis as well. But we do have quite a lot of zones, and I honestly don't like having that many zones. I like more of a clear condition entry factor when it comes to, okay, hold on one second. Um, there we go. Just making sure nothing was on that code. But yeah, I just lost train of my thought. I don't even know what I was talking about, but yeah, let's just get back into the charts. We have a lot of zones. Oh yeah, that's what I was talking about. We have a lot of zones, and I don't like that many zones. I like more conditioned entry model, simply because that does yield better results. But that level of discretion associated with will always be that edge factor that may just push us above the top. But looking on the 3 hour, I'm not seeing anything else significantly. 2 hour, looking to see, not noticing anything particular. No, nothing else on the 2 hour. 1 hour, nothing there. Mm, I don't want to mark that out, but we will. Nothing else. I'll go ahead and mark this out as well. Let's see. Yeah, nothing else really we should mark out on the 1 hour. And on the 30 minute, I'll only ensure that we're doing close by protocols. And we do have a 30 minute here, but it's aftermarket. And I don't want to mark out something within aftermarket of this extent. I'm looking for something more, something with more volume, like this move right here, with which the 4 hour actually rejected off of. Let's see. Let me just check what's up for the rest of the week. This Friday is NFP, so do keep that in mind. I don't think that will affect how I trade though. The bottom area of that range. I'm trying to see something. I'm trying to get into more precision. And that would be quite amazing precision right there. And that's honestly what I'm gonna do. Usually I don't do this, but I'm gonna do this for the sake of um pre-market, pre-market and pre-week, everything of that nature. And I'm gonna mark a more precise zone type area. I'm gonna mark this as a 1 hour. But what you notice here is that this area, if we expand this box, look at how many taps we have at this specific area. Now, if we expanded it, maybe we got these two touches in as well, but we want precision type areas, and this gives us that additional level of precision that can provide that additional edge. And we see that precise 50% touch and strong move yesterday. So that's pretty good to see. Not really noticing anything else that we need to mark out, simply because there's so much. But yeah, this is all the zones. We just did a quick charting session with you guys. But I do want to mark out a volume profile, see where the volume in action is actually happening. So we see nothing really we can gain from this. Okay. So what I'm noticing already is that at this lower region, around this 1 hour, or more of that 4 hour area actually. So I might go ahead and come back and put it into that area actually. Yeah, I think I will. See, sometimes you edit stuff, but you have to readjust them to ensure it fits with what the market is giving us, because we don't want to overfit what the market is giving us and avoid that area of importance, right? I'm gonna head on to the 2 hour simply so we get a more in-depth view. This is what we see. You see two key high volume nodes. One is here at this 4 hour area, and one is here, right at this 3 hour and by this liquidity area. And that does provide for some pretty good areas of interest. I'm looking to see how price reacts here. But from where we're sitting at right now, it does look like price might head more into that central region of this high volume node. But if you start rejecting and show clear signs of supply or rejection zones head lower, then we would expect price to head into the lower high volume node. And that's just simply how I'm going to try and base it for now. But yeah, we see that this upper high volume node is very significant. And if you look at it, that's at this 3 hour right now. So where we're sitting at right now is a very, very key level. And it's going to be very interesting to see how this play out. And again, we have that high volume node here. See, I mean, nothing too crazy. We did get a little bit more information as to where volume is actually being transacted. But I'm going to mark out an even higher time frame volume profile. Yeah, honestly, we won't get anything much from that for our intraday perspective. But yeah, from what I'm seeing, this is how it looks, right? At this area, we might see a movement down, but this area is going to be a key region for us to scope out and actually see what happens, right? Like, I wouldn't be opposed to something like this happening. But I also wouldn't be opposed. Hold on. Yeah. Also, I wouldn't be opposed for something like this to happen as well. So my most preferred outcomes is literally just a reaction from this 3 hour. Upwards reaction or downwards reaction, it doesn't matter. Based on how we react to this 3 hour, we should be able to take some play heading towards the next level. So if you see strong reaction breaking below this level, that should show us clear confidence if we do see that aggressiveness through order flow, that we can continue the selling move perhaps through a retracement and continue that sells down to the 4 hour where we have to see how price reacts again. But now if we head higher, I want to see how price, where liquidity on Bookmap is first of all, where the actual liquidity is at. and two, what price does at that level. If we reject off of it, then we can simply make a retracement play. If we don't, we can make a retracement play into those levels. So there's a variety of ways that we can actually leverage and capitalize off of the variety of levels. But yeah, that's just my view is simply and only looking at ES so far. Now, let's go ahead and look at NQ now. And we should be able to do NQ a bit quicker. But yeah, let's go ahead and do that real quick. Marking out all these levels. We're marking them. We don't want to go overboard with our level marking once again. I'm gonna look to see if we have any zones. I have already spotted one down here. So 4 hour right there. We have another one right here actually. There we go. We could likely mark out this high as well. I'll mark out this low as the next one. There we go. Let's hop on 3 hours, see what's up there. Realistically, these levels are just for a tad bit more structure. We're going to leverage the volume profile much more. And also order flow, as you'll quickly happen to see. Yeah, if you can notice at this level we have two stacked zones. So I'm not gonna mark out either of them. Yeah, let's go on to the 2 hour. Do have that area, but it does align with the 4 hours, so I'm not gonna mark anything there. 1 hour. You have that 1 hour there. Come down, go up here. Mm, I mean, nothing else really we can mark. We have these levels, but that pretty much correlates. Oh yeah, and this was one thing that I've noticed as well after charting both NQ and ES. On NQ, it does look like we are shifting a bit more bearish, but on ES, we still continue that upwards move just with a little bit less aggression. But on NQ, we see an upwards move, but now soon after, we start seeing that downwards move. Could this be an indicator for the next retracement down? We don't know. And this 3 hour touch that we're making right now on ES might be that indicator as to where we might head next, and might be that validation for this divergence between NQ and ES, which we might be able to leverage. But once again, just something to look out for and be careful for. Again, most of that would apply on a longer time frame perspective, but think about it. If you were a swing trader and swing traded for the last 20 years, you would notice that if your strategy is a normal following capital strategy, you would notice that the longs would have gotten a lot more profit as compared to the shorts, simply because the overall market has moved up for the while. So you have to understand those types of factors. But coming back onto NQ, you do have a 30-minute here. Same like yes, it's in low volume, so I'm not going to mark it out. And you know what? I'm not going to mark anything else out simply because it's unnecessary to do so. We're just using NQ to validate or invalidate what we've seen on ES. Go ahead and mark out this region. Nothing really we can notice from there. This region, we actually see that our high volume node is right in the middle. Hmm. So what I'm noticing right now is that the high volume node is right in the middle. It's not above, it's not below. But on ES, we have a high volume node above and a high volume node below. Something like this. But the NQ volume node is right in the middle. This could potentially tell us that NQ might be better valued, or we might stay around this range for a while. Or it could tell us that ES may be revealing something that might allow us, that might be leveraged to capitalize off of. But yeah, I'm seeing, okay, first thing, we do see a high volume node down at these lows, and at these highs, we do see a partial high volume node. But more than that, at this area, we see a high volume node right here. That area does align with that 3 hour that we are seeing on ES. So definitely something to look out for. That 3 hour is much more significant than we've actually thought, right? This entire area right here is much more significant than we thought. So definitely want to see how price reacts at this level, and that is going to be my condition for this week and next week. I want to see how price reacts at this level. Within that level, we have to be careful. If we can take retracement plays into levels within that level, significant levels within that area, then we can trade within it. But a better idea would simply wait to see where price breaks out of this range in particular, and simply take a retracement play if enough confirmation has been given. That's what I'm going to look for regarding NQ and ES. But let's go ahead and look at and see where the VIX is sitting at as well. And let's see. So what it looks like is the VIX is making a move higher, but at the moment we are retracing, and we've retraced into that perfect 50% pocket, I would assume. Yeah, basically that perfect 50% pocket. So, I mean, this is a very key area that we're sitting at right now. Depending on how we react here, could head higher. And typically when we do tap into this level and break above this 17 level, we do seem to head higher up till 21. That's just an observation that I have made. And we can notice that multiple times in the past as well. So I do prefer the bullish side a bit more, simply because the markets utilize a risk premia to always drive the markets higher, typically. And there's nuances within that, but that's how it typically works. And if we can leverage that from where we're sitting at right now, then that would be great. So yeah, that's pretty much my pre-week and market analysis regarding ES and NQ. Let's see if we can, yeah, let's go ahead and analyze today's market action as well. We might as well. 8:30, there we go. And this is where that order flow factor comes in. I know we haven't utilized order flow for a pre-week analysis like we usually do, but that volume profile gave us more than enough information for us to actually utilize, so we do not have to use the footprint charts on there. But for the intraday, we should use order flow. And yeah, so let's see. 8:30. So looking, we did open between these areas, and yeah, oh my god, it looks like we've been very choppy. Not very choppy, but pretty choppy since market open to around 9:30, 9:35-ish. And if you take a look at the news today, we had jolts, but nothing too significant. I want to see if there's any trades specifically at this region, because that retracement does look pretty nice and pretty clean. Or potentially the shorts here as well. So I'm going to go circle those and check if there's anything there that we could have potentially taken. Maybe this one as well. these three, looking on a price action and clean risk managed perspective, those three are going to be our only opportunities that we should have taken. So I'm just going to go ahead and quickly skip forward and view what has actually happened. So what we're seeing now, Bookmap does seem to be a bit like cluttered up, not good trading conditions. And now this is a bit more better to understand. We have liquidity at 6455, which is right here. And that is a key area, so I'm going to go ahead and mark that out. I'm going to remove my magnet for now. Bookmap liquidity is there. Anything on the lower side, we have 6440. Bookmap liquidity there. So yeah, using that, let's see. Looking at that 9 a.m. to see if there's anything we can find there. So what it looks like already is that price has went up into this upper liquidity region with stacked liquidity. We potentially saw buyer absorption. I do want to, let's see if we did. Where was it? 8:30 a.m. That would be right around 8:35-ish. Yeah, I mean, what I'm seeing is a lot of aggressive buying is coming in. Nothing is really at the top simply because of the clutteredness of the order flow that we are seeing. But at certain points, we do see high volume near the top, like such, and potentially that could be a signal of absorption. Nothing confirming anything yet, though. So you're gonna keep that in mind. Right now, the spread of Bookmap liquidity is not the greatest trading conditions, and now we see that these liquidity orders are moving down, maybe around that 6550 area. Ooh, yeah, I think this is could be a great play right here. So what we saw was that price tapped into this region. Buyers tried to break through aggressively, were unable to do so. We saw selling action come in. Now these passive sellers moved their sells lower, and I want to see if at 9 price retraces back into that this barrier. We see absorption, and then we can potentially enter off of it. But I do want to see if the yeah, I mean, look at that. We do see a decent bit of absorption, nothing significant. We see a little bit of absorption here, 1,000 contracts and more here. Potentially could be an entry condition if Bookmap looks essentially clean enough. Okay, that does not do much for us. Ooh, maybe 50. Oh, at 9 a.m. we did have jolts. That's why the order book cleared up so much. That's interesting. Um, I mean, I'm not noticing anything significant that we could have entered. I wanted to see that 9 a.m. play out, but let's see. If you look at this right here, you do see that a lot of buy orders, an abnormally large amount of buy orders came in around this 6450 area, but price is still below that 6450 area, hinting at absorption. And now we see 500 iceberg orders. We see stacked liquidity, and we see price start to head down. We have liquidity at 6435 down here, which can potentially target. Like, honestly, I wouldn't take this. Simply because there's no clear factors. And we're consolidating around that range quite a bit. But we break down. If you can retrace into a barrier and get a more tight region, then it might be more reasonable. But We're not seeing that yet. Yeah, I mean, now the spread of Bookmap liquidity is not the greatest again. Let's see where our next potential trade, 925. So around 25 here. We have liquidity up at 6460. This might actually be a good play. Let's see. Just gonna spam my right arrow key so we can move through this live stream. But right now, spread of liquidity is quite condensed. We break out towards the upside. Yeah, honestly, this might be a decent area to enter right at 928, so the 925 candle right here. But we do see quite a bit of buyer absorption there, but that quickly gets bought back up. We're not seeing any seller absorption, so I would not have entered. Even though it would have worked, I likely would not have entered. And that's okay sometimes. You need solidified criteria. Let's keep going. Well, let's see where our next one is. So this one, oh, it's at 35. Maybe. We have it at 6460 and also. Ooh, this might be decent. We do see seller absorption at that area. And that is liquidity flipping if you look at the footprint chart as well. A large buying delta here, break above it, selling comes in, selling is unable to push below, which shows buying strength continuation, which could signify continuation towards a move up. If you look at the book map right here, honestly, I don't know if I would have taken this and or having enough confidence to take it, simply because we do have this stack of liquidity that's preventing us from heading higher. But that absorption could have been the signal to raise prices higher. It's just not the easiest to tell because we haven't been in the charts for around 2 weeks now. So at my current like condition, I would not have taken it. But if I had more confidence, we potentially could have entered. And I'll let you know where we would have entered. Right here, 6454.25. 6454.25. Right there. And our stop loss, that might be quite tricky, but it might be around 6450 region. 6450. It might be right here. So you see that delta here. 6450 gives us more than enough room. Yep, 6450 is a good stop. 17 tick stop loss. 21 tick take profit. And if we want to tighten up a tad bit more to account for this low right here, let's see, might be a bit tighter. But let's just say if we were to enter it based on the base model without any constrictions, 1.24 risk reward would have played out nicely. But if we tightened our stop, it could have been much better. I was thinking that we could increase it up to 1.5, so right here. And that would have put us at a 1.9, almost 2 risk reward, and would have allowed for a trade with barely any drawdown inside of it. So if we entered this trade, likely could have been good, but on my current conditions, I would not have entered it simply because we have to see we need more screen time in the current conditions to actually be confident enough and have enough conviction to take these type of trades. But yeah, that's the final one. We didn't see anything at this 25 region. 9, 10. Wait, am I tripping or something? No, we aren't. Yeah, yeah. We thought through it properly. Yeah. See, yeah, I mean, there's no opportunities later. Maybe a reversal opportunity up at those highs. Let's just quickly see. Yeah, I mean, the spread of Bookmap liquidity is not the best. So I personally would not like trading in that environment. Trades could have been made, and it likely could have worked out. So yeah, I mean, that's gonna be my analysis for today, September the 3rd. And yeah, that's essentially. Wait, I'm not done with the video yet. That's essentially all I have on the charts. But one thing I do want to go before I leave is quickly ask ChatGPT for a quick update on the intraday market charts. So let's go ahead and do that. Give me some important information or a news update based on the NQ and ES markets and the overall stock markets in the months of August and September 2025. Give me some sentiment. Give me some sentiment. Give me some important news and basis behind it. And just give me everything I need to know in a concise and simple form for intraday futures trading. Should include fundamental macroeconomic data behind news events, etc. This is quite a weird prompt, but it will happen. It will give us what we want. So you might want to copy and paste this or do whatever. Let it think long and see what we get. It's still loading. Okay, let's see. Quick take. Bias. Cautiously risk on but fragile. August closed green, but long bond yield spikes, soft labor data, and manufacturing contraction are capping rallies and increasing chop. I mean, that was what we've been seeing on the charts as well. NQ looks something like this, and ES looks something like this. So this is what am I saying? This is a consolidating upwards move. This is quite choppy. We have shifted to more of a consolidation downwards move. So we do have to see. Watch yields first and tech second. Okay. The FOMC held rates at this and Powell Jackson's September cut, which is okay. Hold on. I'm not trying to read through all that, so let's just say, what does that mean for ES and NQ futures? Give it to me in a very simple way. Let's see. Got it. Here's a simple. Supportive factors. Fed is leaning towards a rate cut. Okay, that's good. Inflation is cooling. That's good. Headwinds. Long-term bond yields are making equity valuations heavy, especially cynical. Oh yeah, so Trump, he's essentially trying to do a variety of economic tampering and policies to make inflation lower and the price for bond yields to increase so that the national debt can lower. And it's good economic move, but it may make the markets fall down in the short term. And when I mean short term, I don't mean in an intraday perspective, I mean in long term perspective. Trade bias, ES trades choppy but more stable if yields come down on weak data. ES grinds higher if yields spike. ES fades but less violently than NQ. I mean, that's exactly what we have been seeing. Supporting factors. AI and tech is still strong, and a Fed cut would juice that. Okay, perfect. Nvidia beat earnings, but China sales spooked markets. Higher yields hit tech the hardest. NQ outperforms when yields drop or data is soft. Underperforms sharply when yields rise or inflation prints hot. Okay, jobs data NFP. Okay, so this Friday when there's NFP, if it's weak, yields if it's weak, that means a rate cut odds up, which means the yields are down, which means the NQ um moves more than ES, and they both start to sell off. But if CPI is cool, they rally, hot fade, especially NQ. ISM services, watch prices. Okay, we don't have to worry. One cut is likely, but tone about futures cut will decide trend. Long NQ, red momentum. So you can just keep messing around with ChatGPT. What I'm gonna do is I'm gonna ask it. So it looks choppy at the moment until NFP and FOMC and CPI. Let's see what is exactly. Right now are stuck in chop mode. Alright, perfect. So yeah, that essentially just confirms. Right now we have been seeing a bit of chop. NFP and FOMC in September could result in a more trendy month when it comes to um a bull market or a bear market, but right now we're sitting in a consolidating range. No matter if that's up or down, it's more of a tight range, and we can still benefit from that. There's just more we can play off of, but less likelihood of each level working out. So there's pros and cons to each type of market condition, but we have to be able to play with the cards that we're dealt. So yeah, honestly, that's gonna be pretty much all I have here for this video. It's been a while since we've done this type of videos, and this video is almost 45 minutes long, and I'm gonna keep talking to get it to 45 minutes long. So yeah, I mean, I don't really have much to say. If you have any questions, feel free to join the free Discord server. Link is in the description down below. There are many resources in there. Everything is completely free, and you can definitely get a thing or two out of it. Additionally, if you want to know how to use Orderflow tools like this and get started with it for completely free, and when I mean free, I mean quite a lot of free accessibility. You don't have to pay a dime unless you want to go deeper into or need live functionability. You can start practicing right away. Check out Addis, the link is in the description, one of our channel partners, and also the Bookmap live stream if you're interested. But other than that, I don't really have much else to say. I'm looking forward to seeing you guys tomorrow and Friday and over the weekend and start posting a lot more shorts as well. So I'm excited for that, and I guess I'll see you guys tomorrow for pre-market live. I will try my best to be on that live session in the morning. But that's enough dragging this. That's all I have here for today, and I'll see you guys tomorrow morning. Goodbye.